All right. So thanks for the opportunity to present. My name's Dan Calvert. I'm the current CEO of MYMY Catering. My background previously is in tech data, having led a number of teams in large departments and multinationals across sales, marketing, operations, and launching. And as of 2019, as part of a management buyout, together with a number of investors, we took over a catering startup. Perhaps someone can mute themselves. I'm hearing a lot of speaking. Thanks. So MYMY Catering addresses a global catering issue. Typically, caterers are the catering industry in most developed countries is heavily fragmented. In Europe, typically we see 10 to 15,000 independent caterers, making up about 70 to 80% of the market. And this is at oppositions with what customers expect today. Customers expect a digital e-commerce experience, similar to what they would get from a B2C food delivery or a traditional e-commerce experience. Meanwhile, local caterers are not equipped, neither in skill nor in staff or capacity to be able to service them. The opportunity is significant. So the European food and beverage opportunity is heavily addressed across restaurants, across takeaway, across beverage delivery. However, catering is the last untapped piece of this that hasn't been digitized yet. So what MYMY Catering does is MYMY Catering takes care of the complexity. And we do so through technology by building a global and at this time European or pan-European catering brand. So we handle all demand generation through the marketing, the technology, developing the culinary product, the customer service, and the finance administration. We therefore enable caterers to really do what they're best at, which is cooking, preparing, and delivering food. This is what they want to be focusing on. At the same time, while we operate a tech-heavy business and we're asset light, we do vertically integrate. We are partnered with large and reputable leaders in the industry, and we do own the culinary product. We own the pricing, we own the IP in the business. Our business effectively has two products, or two angles in which we look at it. We have a digital product. The digital product's heavily focused on self-service and automation. We believe in a startup with a lean team, where we automate all or the most of our internal processes. Caterers and customers tell us time and time again that they want to self-service. When they want to order and they want to pay and they want to transact, they don't want to have to wait for manual intervention. That's catering of the past. And this is validated with us having hosted more than 30,000 events to date. We have a database in excess of 40,000 customers. And many reputable companies that is within that. Every company with more than 20 employees, typically, and per year will cater to at least one or two events. The larger ones will do upwards of 100 events. The other angle is the culinary product. With catering specifically, there isn't typically a large brand involved. Standardization is rife in this industry. And that's something that we can leverage. So we define the culinary product amongst the most popular and desired products in the industry. It allows us to develop our own recipes, to select the ingredients, and to dictate this to the different caterers. It means a standard quality for customers. It means partnerships with large brands, and it means easier catering expectations. It's heavily validated. We have commercial partnerships and supplier partnerships with Coca-Cola, Metro, and Unilever at this time, and a healthy pipeline of kind of further suppliers being developed. And then finally, our model is healthy. We're not in the business of high burn, no margins or low margins. The benefit versus a traditional B2C delivery platform that we're often compared to is the basket size. The delivery is not outsourced. The basket sizes are a multiple of 25 to 30 times larger, which means that typically on the individual order, we will always generate a positive margin. Therefore, it's simply a matter of scale. Our margin comes from our own pricing, which means that the caterer always turns a profit, a simple service fee, which means the customer receives a good user experience, and a financial incentive that comes from us working with the large suppliers. At this time, we're seed funded. We received an extension of our seed during the pandemic. We're growing at a rate of between 20 to 50% growth per month, and have an annualized or historic, all-time historic GMV in excess of 8 million, and annualized currently on track to move towards 8 million to 10 million next year. At this time, we're not currently actively raising. We're exploring an early Series A in Q2, Q3 next year. However, we're speaking to and selecting investors that are interested in this. That investment would be focused on extending our international expansion, currently earmarked to go into Austria and France, potentially Switzerland as well next year, with the opportunity to extend this with additional fundraising. Thank you for your time, and yeah, I would open it up for any questions.
Thank you, Dan. Thank you for the wonderful presentation. We will wait for a while to get the questions from investors. Thank you.
So Dan, how do you, intend to use this funding?
So the spending is primarily focused on hiring people. So our business is flooded with demand, and it's simply a case of we don't want to build a large sales team. We want to build a larger tech team. We believe in automation, so there's 2 to 3 key tech hires that we need, and then next to that, the intention is to start to build launch teams. So typically it takes us 2 to 3 people to launch a country, and then a country is generally managed once we hit 6 to 8 people in that country. So currently we have runway for the next year and a half. We have a roadmap that allows us to go into 2 or 3 countries. A country is typically EBITDA positive within about 12 months.
And what is your background?
My background, so I'm a tech guy. So I led some of the early big data projects for the Adidas group back in 2012. I led sales teams for Google, managing upward of 140 people across South Africa, Israel, United Kingdom, Ireland, and the Netherlands. I was the 4th employee for Uber Eats in the UK. I launched Uber Eats in the UK, in the Netherlands, in Stockholm, in Vienna, in Durban, South Africa, and expanded it nationwide. I was the early employee at N26, the digital bank. And then at that time, I stepped over, because I was in Berlin anyway, back into food delivery with MYMY Catering.
And can you just tell me something about competition? Competitor.
Yeah. So I think competition typically comes in 2 or 3 different forms. A lot of it has changed during the pandemic. A lot of the startups have shut down simply because they were overly weighted towards manual process. A lot of them had large sales teams, large customer service teams, and the overhead costs of the salaries meant that they couldn't sustain the pandemic. We're very tech focused. So at the moment we compete with a couple marketplaces, but the marketplaces aren't vertically integrated. They don't own the recipe, they don't own the pricing, so they lack control. Or we're competing with some larger local caterers, but they're asset heavy. So they're very capital intensive and they won't scale. So I think currently there's not a great deal of competition. There's one in the US. So the most comparable is Easy Cater. So that's EZ Cater. They do typically about 1.6 billion annualized revenue. And they're, I believe, Series H. And they're profitable in the US. They acquired a French caterer before the pandemic, but they shut that down again. The expectation is that they will look to come to Europe again.
Okay. Thank you, Dan. Italy.
Okay. Dan, I wanted to ask one question. how much equity are you willing to give to the investor?
So I think the Series A, generally what we're looking at between kind of a 20 to 25% range. We have a number of historic valuations that I would be happy to disclose privately. I think what we are doing at this time is we have a number of strategic investors that are asking to put money into the company. So we're open to, at the moment, agnostic of the valuation, taking on CLAs with a certain discount on the Series A to allow investors to enter early, to allow and then to effectively inflate and grow our Series A price.
Okay. Thank you, Dan. Thank you.
Thank you.
I would request anybody from the attendees, if you would have any questions, feel free to ask. Thank you.
Can you tell how do you approach your valuation demand? Do you expect that investors will accept valuation reflecting significant growth for the next years, or are you just happy to get high quality investors helping you?
I think for me personally, the quality and the value that the investors bring outside of money is my priority, but I also recognize that I have a cap table and a board. So we have an advisory board in place with qualified VCs and investors in it. So they also need to kind of see a realistic valuation that matches their previous rounds. So I think our valuation is lower than what you'd expect from some of the VC type growth companies. So it's not, I think typically in the food tech space, we see 5 to 10x on annualized GMV. We're typically more about kind of 2.5 to 3.5 on that. I think we're not really valuing the business on future cash flow, because that's not realistic, because the reality is that the future cash flow is a product of the investors' money. So we shouldn't ask them to pay for their future interests. We're more focused upon where we believe our model scales. So on kind of how much EBITDA can we generate within the German market, and how replicable is that across multiple markets within Europe. So it's more based upon the market conditions and how replicable and scalable that is. I think within Europe, we see typically 4 key markets that we can replicate Germany in. So France, the UK, and potentially Poland or Spain have similar dynamics to Germany, and then we believe that the US or Australia would be the next suitable markets. So I think typically it's about a 2.5 to 3.5x multiple, but I think there are a number of kind of qualitative aspects to the valuation as well, in terms of the partnerships that we have and the team that we have and the existing investors.
Okay. If there are any other questions? Okay. Thank you, Dan. Thank you for your presentation and your time. We'll be in touch for further discussions. Thank you.